Alright, boys. So, who else got up early to watch this FOMC? To be honest, I didn't watch it speak live. It's not usually that important. You can sort of see the reaction and read Twitter enough to know what she's saying. And so, but immediately, what is interesting is the setup that we had. Right, so what was the setup? The setup was that we had fresh highs being made on the euro, and we had fresh lows being made on dollar yen going into this announcement. Okay, so the market was even more poised for a potential reaction to a hawkish raise, and that's what we got. We got the hawkish raise where she not only raised rates, not only dot points suggest we're going to raise again, but there was the talk about an asset purchase program beginning later this year. Sorry, balance sheet reduction beginning later this year. You can't ask for more than that, right? You can't ask for more than that if you're bullish. Okay, so the rally in the US dollar is part tactical and part a reaction to her being hawkish. Now, why is it tactical? Because the market was so short-term overbought, and the reversal price action that you're getting in nearly every pair, new highs, then basically making new low on the same sort of day, and same with dollar yen, is enough to suggest that this can continue. So what are the targets though? What are the targets that you have to be thinking about? So the same update I've been giving traders all day, all my clients, is it's very natural in these sort of scenarios that the stops on the other side of the market are going to get taken out as well. So that leads us down to at least 1150, and on the dollar yen up to 110.40.50. Okay, so the best way of playing this is not to be surprised by that sort of move, but not to be sort of too suckered in as well. Now, why do we not want to be too suckered into a US dollar reversal? It's because the bond market hasn't fully believed Yellen just yet. So if the bond market doesn't believe Yellen, then it's very hard for us to have a sustained rally. All right, so you can have a tactical rally, and stocks are rallying even though stocks are falling even, and that's not stopping dollar yen right now, which is interesting. That's not normal. And but you can see a super strong number from Australia in our unemployment numbers today couldn't allow us to break yesterday's high. And that's really sort of sketchy price action for the bulls. It's not that we can't go up, it's just that we're going to buy Aussie against something else, and we'll look at the trade that we have set up in a second. So this is after the CPI crash, new lows on the 10-year, and then a hawkish Fed did not allow the market to rise up. It's grinding a little bit, but didn't get back above some key levels. And this really needs to have been on a trajectory past 2.2 really quickly, and then we can talk about it. A sharp move in dollar yen to 111, 112. The way that it played out, then I suspect that we're going to struggle above 110.50 if we are able to take out those stops. And so that's the way I'll be positioning myself. Short-term long US dollar, like today. I mean, short-term long US dollar, looking to take profit after it takes out those the stops on the other side of the market from last week's range. Alright, so what are we in though? We're into some Aussie Kiwi. So why are we into Aussie Kiwi? Well, not just because it's been basing a little bit underneath 105, and that broke back above 105. I mean, that alone is good. But what's the reasoning behind this? You had weak GDP from New Zealand, and you had really strong Australian unemployment numbers. So there's a divergent economic data there that should allow a short squeeze, and you're getting the first leg of it. We're looking for the second leg up to around about 106. That's really the trade. It's nothing huge. You can put your stop pretty close, 107, 104.70, and put your TP, 105.90. It's a good, to me anyway, makes sense sort of trade. It's not a big effort for it to get up there. It requires the Kiwi to fall, which is, on the cards just broadly because You've had that 5-week rally, which is its normal sort of extension. You've had the reversal during the day. Let's see how today goes, but it should break back below 72, and that would just be enough to get us, you know, a couple of days selling in the New Zealand's due anyway. So just this move to 106 on the Aussie dollar is not a huge call. Aussie Kiwi, I mean. That's we're not going to get a bravery award for calling this. You saw the same sort of reversal pattern in gold. Now gold is struggling though to pick up with. I mean, it's struggling in a sense to have momentum here to fall, because if there was one place where, you know, you were seeing a little bit of profit taking ahead of time, it was gold already. So it wasn't like gold was making fresh highs. Gold was just at 1280. So it's not really the easiest place for you to sell down here, but price action suggests you do. And if you believe this is happening here, this euro is going to break lower. What's the latest in the pound? Well, I mean, no new news regarding May, but what we have seen is some weak retail sales data, which suggests that GDP for the second quarter is going to be also weak, and just broadly, you know, you don't need too much negativity to get the pound to sell anyway, given that we've still got that uncertain political environment. So we're back below 127, a little bit of US dollar strength, a little bit of weak UK data. There is the Bank of England in a couple hours. How they react to the inflation numbers is critical. Probably they're going to say they're more concerned about wage growth being slow and you know, consumer spending being low. You know, that's probably where they're going to be concerned, not so much concerned about a headline figure in inflation. So it's yeah, so that's the way I'll be reading it. It should be a non-event actually. The speech later from Carney in a separate sort of situation, some sort of mansion dinner, some sort of, I don't know exactly what it is. It's a yearly sort of dinner they do. Anyway, but it could be an opportunity where some of the political speakers will talk about a softer or harder Brexit. It's good for headlines, and Carney might say something that the market can catch on to as well. But broadly, you shouldn't expect the huge event from BOE. I think they're going to be acknowledging the CPI number, but they're downplaying it. So if anything, probably risk to the downside if they're worried about the outlook now, given political uncertainty. I mean, political uncertainty does not inspire a central bank to be hawkish, that's for sure. You know, that's not what you expect. Whether we can get to 110, I suppose, is you know, a little bit of a question. I don't mind the dollar yen buy though. I suspect we're the path of least resistance is high here. 110 is just a number, right? But it's probably a number to watch tonight, later. If it should be tested at the same time that euro's taking stops, and it could be enough just to push it back above it, and then probably take out those 110.50s. Yeah. Soft Brexit. But that's what I was talking about there, Yo-Yo. Hammond. I mean, that's a lot later, right? What time is in your world? In my world, that's 6 a.m. So we're talking 11 hours from now. Yeah, I think broadly, Red Rhino, US dollar is going to struggle after this sort of move here if yields can't turn. So yeah, that's part of it. Alright, Jenny, what are we talking about? I've seen you post your Chinese friend on Twitter a couple of times. What is she? Let me have a look. A business reporter. She writes about economics and helps edit the finance channel. Yeah, I mean, she's probably got some friends in banks, right, who give her the the pound forecast. Economists generally aren't involved in forecasts for currencies. But yeah, no, it's good to read that sort of things if you want to get the fundamental backdrop. I mean, some journalists know more than others, right? You know, I've done enough talking with journalists to know they're not, you know, by the questions that they ask, that they do know a little bit about FX, but broadly not too much. Yeah, you definitely don't, you know, try to take what they say as you know, they move more towards sensationalizing than anything else. And so the bigger the number, the bigger the call. You know, so if you're talking about someone like Ambrose Evans Pritchard, right? You know, he's really, really aggressive when it comes across. He always picks the most sensational thing to talk about, but he sort of knows what he's talking about in terms of the economics behind what he's saying. He's probably the most famous one out there. But you know, he's always looking at really big, gloomy things, and a lot of his predictions don't work. Yeah. All right. So let's see some reactions to the FOMC. HSBC puts out a little report. Yeah, you can't expect that. You know, I basically use nothing I learned in university in my trading, right? I use more of the theory I learned playing poker than I do for my finance classes or my purchase parroting. Look at your currency models. %90 of trading is risk management. Yeah. Yeah, I mean, what you're doing, right, a lot of the time you're risking things, it's got to make sense. You've got to have some sort of, whatever your reason behind what you do in trading, there has to be risk management sense, right? Risk reward. You're basically chucking money at different ideas all day, every day. Your brain comes up with crazy ideas about what's going to happen next, and, you know, it's got to be worth the risk. And some people's brains aren't, you know, sort of attuned to the danger, or when they get into trouble, they don't close. That's the first thing you got to identify when you're trying to help someone trade. Why are your losses so much bigger than your profits? Alright, so what have they picked up on relatively soon? Relatively soon. If the economy evolves as expected, then balance sheet disinvestment could commence relatively soon. We don't believe the FOMC will want to tighten in September with two tools simultaneously. For that reason, we expect the next rate hike will be postponed until December. I wonder if they suspect... So the formal announcement they think is going to happen in September. That's bullish. In terms of how much is it worth, it's worth around, according to one of the, you know, in terms of how much is the balance sheet adjustments worth, Deutsche Bank report I read suggests it's around about 300 points in the dollar-yen a year, right? 300 points a year. So the tapering, not the tapering, but the balance sheet reduction from the Fed, It could be worth 10 big figures over the next 3 years. FMC raises total target, expand range. Kashkari dissented again. Oh, God. Alright. So this look at, these are the Fed props, right? This is the June to March. This is what we've got to look at the differencing between, okay? So this guy popped up. This guy came back down. No, this guy came up. One went up. So a bit bigger of a cluster here. Let's see here. So what's that? Three rate hikes to get to there for 2018. That's becoming more the consent. Some cats looking for 8. Jesus. What? A couple of them are looking for 8 rate hikes. And then 3% seems to be this new natural rate of expansion now. The NIRU, right? The long-term stable rate that they're going to try and get to. What's the bet that they don't get there? How many scandals and issues are going to have in America in the next 3 years? I should be right. Trump's a great unifier. There'll be no problems. There will be no problems. We'll go more into this a little bit later. This the treasuries, and this is the expiries of the bonds that they hold, and that's one way to do it. Just let them mature without rebuying more. I will get a little bit more savvy into exactly the process of this. I've never really looked into it, and it's the first time it's ever been done, right? Ever. So the balance sheet reduction. So QE was pretty crazy to begin with. Balance sheet reduction. In terms of what exactly they're doing with the money, where the money goes. I mean, they made money out of thin air, and then the money goes away. Or they're cancelling one side of the ledger against the other. If there's profits, I mean, supposedly they made a lot of money as well. So if there's profits, is that going to the government? I think it should. I'll get savvy on it. I'll talk to a couple of bond traders I know, and they can explain to me what the hell the plan is in the future. Alright, these guys actually dovish going later though. What's this about? So they've got the same idea as me about the euro going to 120 by the end of year 2017, but what is the hikes in the dots were largely expected and offer no grounds for US dollar reassessment. Oh, they just basically think it's from the ECB has the greatest scope of surprise. There is a point though, right? The Fed's raising rates and dollars struggling to even make, fresh highs, and it's way off the bottoms by only 100 points. It's really not encouraging price action. I still think we can make that little next leg higher, but yeah, after that, I'll be looking to buy dips on the euro later in the week, later next week anyway. Sorry. I don't think it's that simple that day, right? You know what I mean? You got 4 trillion on one side. Yeah, but where's who do they owe the money to? Yeah, themselves. They just, they're in charge of this stuff. So yeah, I mean, obviously it cancels each other, but there's been profit or loss made on some of these bonds, and that's got to go somewhere. They'll be like, stop asking questions, son. Join the Masons if you want to know. Literally, they do what they want. They literally do what they want. They're not buying them back. They're letting them expire. That's the part which is the weird part. God, every time we get into bonds, it's like, where's the bond traders at? They're definitely not here. Alright, they retail bond trading is something that's not a thing. Maybe in 10 years we'll be trading bonds at high leverage, right? Probably should get into a bit of that. It's supposed to be a little bit easier to predict than Forex prices, that's for sure. But that's really, you're kept out of bond trading via, it's a big money game. Alright, let's look at Brett Donnelly. Yeah, no, but what I mean by that, Red Runner, is that we watch the market move, right? We watch the bond prices move, but when we traded, I literally have never traded them in the last 10 years. I have heard on the street Saxo's trying to get into retail bond trading. Yeah, so the money comes back, right? The money exists, right? So that's fine. But they just cancel each other out. Yeah, but there's going to be extra money there, right? From the... there has to be a little bit of money left over from the coupons, right? Alright, what do you got for us? Alright, Brett, you're going to talk about CPI. Any rally in the dollar is just a gift for those looking to exit longs and get short US dollar. Yeah, perhaps. Let's be patient though before we enter. Let's be patient. Now bonds are still in a massive bubble. Like all-time ridiculously high levels. The 10 years. They should be closer to 3%. When I talk to the bond traders, they talk about yields, right? They talk about where we should be and where we are in the stage of the recovery, and they suggest, we should be at 3, and at some point that unwind's going to be really aggressive, right? And the people who have been sort of selling the bond rally, buying the bond rally, buying the bond dips, those guys are going to get caught out. Yeah, and if everyone tries to exit at once, then you're going to see the yields even rip even harder. Have you traded them before, Red Runner, though? Don't they require significant equity in terms of the leverage is not what you get in FX, and they're not really offering micro, are I'll look into the new offering from Saxo Bank, see what really is, how much money you need to get into bond trading. I'm guessing it's going to be a fair bit though. Alright guys, so the two trades that I'm in, the one trade that I'm going to post up right now is the long Aussie Kiwi, and the other trade is long dollar yen. The long dollar yen is more tactical. We're looking just for a move to 110.50, and then we're going to be concerned about it. You can think about buying the euro soon on a dip here. If the right price action and it stalls a little bit, we can get into some of that. That'll be not a bad little trade. But yeah, just let the US dollar buying exhaust itself, and then we can look into it. Let's post that trade up. Yeah, you got to look at the real rate of return, right? I think the main reason you end up in bonds is you just got too much money to buy anything else. I love it when I've got most of my money in fixed income. Oh, do you? If a client says that, I'm like, well, you know, minimum deposit's 100,000 then. Let's post that up in the room, boys. Aussie Kiwi. Yeah, one of the dealers used to be a prop trader in Australian bonds. Now, Australian bonds are move a fair bit too. But they go for ticks, right? They're going just for a few little points when they trade. 0.47. Strong. Writing up the little outlook here for the trade. There we go. Alright guys, well good luck with your trading today. Just be aware of the potential for the US dollar rally to stall at some point, but respect it as it begins here just because of the short-term tactical style nature of it. You know, come tomorrow, we're actually having another update tomorrow, so we'll review where to enter then. But could have some nice little counter, you know, US dollar selling trades going on tomorrow. So I will be back then, same time. But other than that, wish you the best luck here. And if you have any questions, just send me a little message. And yeah, no, we'll look more into bond, the QE situation, the balance sheet, and exactly the mechanics behind it. And once I'm more gamed up and I've asked some experts the stupid questions, I'll tell you, and then you can ask me the stupid questions and make me look good. We're all here to learn. You never stop learning. And the fact that we are becoming these bond traders, looking at bond yields so much these days, is you know, probably won't hurt us. where we can also look at one point is in the option markets. Getting a better understanding of that will also help us with our FX knowledge, and that's something I do have a bit more understanding of, and we can go over that when we if the market gets a little less aggressive one day. Alright guys, good luck with everything. We'll be back tomorrow same time.